Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Nikkei, that's down in trade. Shanghai, that is very, very muted.
We have interest rates that are still too high. So the president sent this note to the Fed chair today.
Now, the new company is expected to be listed between 18 to 21 months.
The stock that I'm looking at is Gabriel India. It's had a big run in the last few trading sessions.
Given these circumstances, if there is a shock, it will be amplified, is what the report says.
Mid-cap index is up close to about 0.25%. The advanced decline ratio is positive.
The journey of SBI is also synonymous with the journey of India.
This was an outperforming index yesterday, but today the mid-cap index is down around 0.4%.
India is trying to seek an exemption from that. Whether that is going to happen remains to be seen.
We have been one of the fastest growing paint companies in India.
The preliminary report on the Air India AI-171 crash is expected in a matter of days, likely this week.
15 points uptick on the Nifty. We have the Bank Nifty, which after seeing a cut has come back into the greens. That was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel D'Souza. And it's another quiet kind of a session, right? Pretty unmoved, unchanged for the markets. The Nifty holding on to 25,500. Banks are in the green. The Nifty Bank is up close to about 200 odd points. Reliance Industries is at a fresh 9-month high. I think the only thing you could quibble about is the fact that the mid-caps are mildly in the red. But again, not by a whole lot.
Well, that's right. But they've taken, I think it looks like a bit of a rolled reversal. Because yesterday the mid-caps that did well. And in fact, the headline index was down close to 100 points. And the point you made, Reema, on Reliance Industries is very, very important. It appears that one wants to take leadership from here on. If you pull up Reliance Industries, you pull up the 20 DMA as well. It has a reference point at around 1,460 rupees or thereabouts. And if that gets protected, the sense you're getting is this could actually be the leader from here on. So we'll have to keep an eye out on that particular name. The other one I'm looking at is Vedanta, because tomorrow there's an NCLT hearing that's scheduled with regards to its demerger. So that explains why the stock intraday has seen a big surge out there. And I was making this point just last week and even the previous week that if Vedanta can hold on to its 20 DMA, it's been a bit of an underperformer, been quite a quiet stock, but it has valuations in favor as well. And that's why I just take a look at that stock. Tomorrow's the big hearing. NCLT green signal is what the street is waiting for with regard to its demerger. In all probability, as per what I've checked, I think that tomorrow it's most likely to take place. But whether or not they get the green signal, or will there be some kind of resistance from the NCLT, is what we'll have to wait by for. But that stock, in fact, up and about. But how do you position yourself in the final hour of trade? Well, Mitesh Thakkar is back with us. Mitesh, the screen is not looking so bad, actually. Advanced decline ratio pretty much even, Steven. And the Nifty is up, 20, 25 points or thereabouts. I think you'll be keeping an eye out on yesterday's high, which is at around that 25,650 odd mark. What's your take?
So, Nigel, I think, the Nifty is flat, but what has happened in the last, last 1.5 to 2 hours is that the Bank Nifty has picked up pace. So, just positioning ourselves to take longs on the banking names. And on the index, as I said, I think, the idea is to buy around 25,400, 420 levels, wait for that dip to come in and take profits around 25,700 also. So that's the strategy to look at.
What about stocks, Mitesh? Any last hour trades?
Yeah. So as I said, I think, the idea is that we would want to take banking names on the long side. So look at the stock of Canara Bank, which I would recommend buying with a stop at about 114, maybe 11375 and a target of around 120. And the other one is Bank of India, which is a buy with a stop just below levels of 118.5 for targets of 127.
Mitesh, I wanted to ask you about the Nifty Bank. Now, that's doing a relative outperformance today, and that's already at fresh all-time highs. What are you seeing on the charts? Next couple of months, could 60,000 be on the cards?
See, as of now, there's no sign of reversal as yet. So the targets, and especially given the fact that it's at all-time highs where no historical supply pivots exist, I think it should definitely, keep the momentum going on. As of now, it looks good. I have a target of around 58,000 in the short term and around 58,500 in the medium term. Not sure if we'll keep going beyond that, but we'll keep, observing the charts, and as and when we see there's a chance of a reversal, either we trail the stop loss or exit positions.
Just a quick word on Reliance Industries. It's had a very strong move. I think the street is hopeful of what will come out in the AGM. And now the share price is just about 5% away from its 52-week high, which is 1,608. Do you see it headed there with the kind of momentum that's built up in the stock?
Reliance, is something which I'm very, very positive about. In fact, today morning also, I suggested that this is a stock which will basically outperform and cover up the big underperformance. The targets are around 1550, 1560, which is where we had a gap, which happened in the month of July of 24. But once it clears that, then I think 1600, 1020, which was the all-time high, should be revisited.
Got that. Thank you very much for joining in. We'll talk to you soon. Let's move on and talk about Apollo Hospitals. Remember, they've announced their plans to list the omni-channel pharmacy and the digital health business in the next 18 to 21 months as a part of the big strategic reorganization. There was a conference call, Ekta was listening in, and now she joins in with the key takeaways and to tell us a little bit more about this deal.
Well, overall, let's start with the deal as a whole. Apollo Hospitals is going to be demerging its pharmacy, digital health and pharma distribution business into a new listed entity, NewCo, which is expected to be listed within 18 to 21 months. And Apollo Hospitals will retain a 15% stake for the strategic continuity. Now, the key business components of the NewCo will be Apollo 24/7, which is the digital business, Apollo Pharmacies, which is the retail business, KMed, which is the pharmacy distribution business, and Apollo Hospitals telehealth unit as well. The projected revenue, 16,300 crores in FY25, targeting 25,000 crores by FY27 with a 7% EBITDA margin. The structure mainly removes the holding company discount. A couple of important call takeaways: they will continue to grow the new company at 23 to 24%, EBITDA margins to improve to from 3.5 to 7%. Growth will come from the e-pharmacy business. Insurance business will also contribute to growth. Cash loss for Apollo 24/7 will reduce and come to zero over the next 4 quarters. Offline pharmacy margins will improve from 7.6 to around 8 to 8.5%. KMed EBITDA margins will move up from 3.3 to 4%. Online business will break even in the next 4 quarters and then move to positive margins. And Apollo Hospitals will be focusing on the hospital, primary care and diagnostics business. Now, overall, the reason why the stock is up is because of the holding company discount going away. The restructuring will allow shareholders then to participate in 2 different business models entirely. And it will also, make transparent the usage of cash, because in Apollo Hospitals, the cash could have also gone into Apollo 24/7 and utilized for that. But going forward, there will be a clear utilization and transparency in terms of cash utilization.
Thank you very much for that. That's the big story. Let's also talk about IDFC First Bank, because that is buzzing in trade, and RBL Bank is higher for the second day in a row. Nimesh now joins in to tell us more. Nimesh, on IDFC First Bank, there is an upgrade?
Yes, Rima. So I'll talk about the private banks which are buzzing in trade today, and I'll start with IDFC First Bank. I highlighted in the morning as a standout brokerage as well, and stock is reacting to that upgrade from Investec. So today the stock has been upgraded to a buy from hold, and they've raised the target price in IDFC First Bank to 90 rupees. Now, Investec note says that they see IDFC First Bank delivering 29% core PPOP growth over the next 3 years between FY25 to FY28, which will be among the highest across all the banks. Remember, only recently IDFC First Bank did raise money from some marquee private equity investors, including Warburg Pincus, at 60 rupees per share, and since then you've seen a bit of an outperformance in that particular stock as well. So that's the first name which is buzzing in trade today. The second stock is RBL Bank. As you rightly pointed out, even that's been buzzing for the last couple of days. Despite the stock isn't banned today, FNO ban, the stock is rallied 3% and large volumes. On RBL Bank, there was an IFL note in the morning. Even they've upgraded the stock to a buy now, and they have a target price of 280. For RBL Bank, the other buzz is that maybe some fundraising could be around the corner, at around book value. So that's the trigger for RBL Bank. We've not spoken about IndusInd Bank, but even that's been buzzing for the last couple of days. I guess now that the names have been submitted to the regulator, all eyes will be on regulator's announcement on when they approve among the 3 names for the new CEO role. So that's the reason why even IndusInd Bank is buzzing in trade. So that's overall why the stocks have been buzzing. A word on the valuations after the recent up move in most of the private bank stocks. I'll start with IDFC First Bank. It's selling at 1 year forward price to book of close to 1.31 versus the 5-year average of 1.37. So still trading below the 5-year average price to book. So that's IDFC First Bank. Even RBL Bank is trading at close to 0.92 versus the 5-year average of 0.78. So marginally above the 5-year average. If you look at the other banks like AU Small Finance Bank, trading at 3 price to book versus the 5-year average of almost 3.9. Kotak Bank is trading at close to 3.19, 3.2 basically, versus their 5-year average of 3.9, almost 4 times. So, most of the stocks are still trading below the 5-year averages, and there is a momentum as well. Plus, there has been a lot of macro events which is leading to an upside for all these banks. So, particularly for IDFC First Bank today, the stock has been rallying on the back of the big investor upgrade.
Got it. Okay. All right. Thanks a lot for that, Nimesh. Well, let's go across to Gurmeet Chadha, Complete Circle, who joins us on the show. Hi, Gurmeet. It seems the last couple of days have belonged to some of these smaller banking names. RBL Bank, it's been the big outperformer. IDFC First Bank that had seen a sharp correction seems to have got its mojo back as well. What do you all like from the smaller banking names?
So, Nigel, if you see, there's a bit of a catch-up happening, especially where valuations have been very low. Whether it is RBL, whether it is now IDFC, because there was some concern on further dilution of equity after the last round of fundraise, and market in some ways trying to price in higher credit growth, which will come as the transmission of rate cuts and CRR cut plays out over the next couple of quarters. But one has to be a little careful here because you have to see where the loan growth is coming from. So, for example, if the loan growth is coming from LAP, used cars, CVs, gold loan, then that's a better way of growing the loan. And if it's coming more at unsecured loans and PL, etc., then I think you have to be a little careful. So I think basis that we like Federal, the leadership change, they have been now moving to more high-yielding assets, which I just mentioned. They are building the CASA book from being very concentrated in South. They are trying to get a pan-India presence. So that is something we like. I also think ICICI Bank hasn't really participated the way it should have, considering that it's been an industry leader on all metrics, whether it is asset growth, CASA growth, and core POP. So I think that's another one which I think it's largely maybe got to do with more with FPI selling on some of the larger names and the way index is being moving. But I think that's an opportunity. So we are adding more ICICI and Federal in terms of our existing position to banks in the portfolio.
Gurmeet, was Apollo Hospitals an existing position for you? And now with this deal, would you look to add to it or any fresh purchases here?
So we had Narayana Hrudayalaya in the portfolio, and that's played out really well for us because there was a lot of valuation comfort compared to both Apollo and Max. Some of them are now, I think 30, 40 times EV by EBITDA. But I agree, a lot of the model like hotels has changed for hospitals. So the average revenue per occupied bed metrics, the way they are now getting existing assets. So it's moving to the way where the hotel business has moved. But as I said, there's very little room for correction, both in Max and Apollo. So we have Narayana in the portfolio, but not further adding to it. What we have been adding in healthcare, and that's now playing out well for us, is the CDMO names. I think next 2-3 years, you will see a lot of export numbers picking up. So export numbers of, let's say, 24, some of them 70-80% have been met in first 5-6 months alone. Whether it is Laurus, whether it is Newland, look at Divi's numbers now. The way it is shaping up. So we are more bullish on the CDMO side of the healthcare right now. Existing hospitals at this valuation, very little room for any deviation from what is guided.
Okay, all right, Gurmeet, stay with us. For the timing, let's focus on another story that's coming in. Sources tell CNBC-TV18 that the Union Cabinet has taken up a proposal for an employment-linked incentive scheme. Parikshit joins us to fill us in with more on that. Parikshit?
Well, this was an announcement made by Finance Minister Nirmala Sitharaman in the July 2024 budget. And we believe that today the government has formally given a nod to that scheme. This was taken up by the Union Cabinet, and this proposal will be for an employment-linked incentive scheme with an aim to create over 2 crore jobs over the next 2 years. This will have 3 components, with the Scheme A, which will provide incentives to first-time employment with a wage subsidy of up to rupees 15,000. The Scheme A will be applicable to individuals earning up to 1 lakh rupees per month. You'll have Scheme B, which will be aimed at job creation in the manufacturing sector specifically, and this would incentivize hiring of first-time employees with salary of up to 1 lakh rupees per month. Scheme C is likely to provide support for employers, provide EPFO contribution reimbursement up to the extent of 3,000 per month to employers who have created more jobs this year compared to last year. So let's see what happens at 3 p.m. when this announcement is likely to be made by the union government. We will also get to know the outlay of the scheme.
Thank you very much for that. Gurmeet, you want to share your thoughts on Gabriel, and the transaction that they're trying to, enact?
Sorry, I missed the name, Rima. Can you come?
Gabriel. Have you looked at it?
Yeah, no. So we do not have that in the portfolio. We don't track that.
All right. What do you like though from auto ancillaries? I think Uno Minda was one that you all had got in early. If I remember correctly, you can correct me on that. What else? And are you all still holding on to that position?
So, Nigel, we have Uno Minda, we have Sandhar Technology, which we got pretty early, which is more into locks as well as fabrication. They make cabins, they make the frame for bikes like TVS, Apache, etc. And they're now working on the EV portfolio also. What we are also now really getting bullish into is look at some more two-wheeler linked ancillaries and names and farm equipment names, because if you see, the monsoon has been very good. And there's a very beautiful analysis, which I think Bajaj, Finserv AMC came up with, that wherever the monsoon has been 5% above normal, the agriculture GVA is about 6%, which is again 2% more than the long-term average. So, and it's reflected in if you see the monthly updates you're getting on M&M, whether it is tractor sales or farm equipment sales. We are trying to figure out more names which we can get into both farm equipment and two-wheelers, because, I believe the rural economy is showing very good signs. The harvest has been good, sowing has been very good, and we have seen month-on-month reflecting even in tractor numbers. We are seeing if there's some opportunity in FMCG also, because last 2-3 years, nothing has happened, whether it's HUL or Nestle or some of the known names. So there is some comfort coming with a very prolonged time correction there as well. Nestle also has a bonus now, which obviously doesn't matter much in the long run. So we are trying to see if, and it's quite, the consumer entire space, whether it is two-wheelers, whether it is auto, whether it is FMCG, is also extremely underowned. So once you get a glimpse of some volume growth coming, I think you could see a near-term outperformance.
Any of the new listings catch your fancy? Like Ellenbury Industrial Gases, for instance, has done very well.
So we have Linde India in the portfolio, Rima. That's again a play on overall Capex and gas play. But that's the only one we have. We also have some exposure coming through linked industries there, whether it is for example Vent, which is more into abrasives and other stuff, but not in particular to the name you suggested, right?
Have you done any analysis of Linde versus Ellenbury and how they compare?
No, we haven't. We own Linde, but as I said, it gives us comfort being a multinational promoter. The stock has obviously done very well for us last couple of years, and we intend to hold it. I'm broadly of the view that for the first time, the private capex has crossed government capex in 25. If you see, the private capex was 13 lakh crores FY25 versus government at 12.5. That's happened after 2030. So we are getting very constructive on overall capex play, which is through some bit of quasi play through Linde. We have some, as I said, transformer companies. We have some plays, L&T anyways we own as a bellwether. So we are trying to play the private capex story, largely more through power equipment and some of the industrial names like Linde.
A quick word on, I think, Hind Rectifiers was a stock you spoke about last time around. Since then, it's done quite well. And over the weekend, they won a 200 crore order, which is large for such a small company size. What is the view out there? It's already rallied quite a bit. What are you all penciling in?
So there are two plays here, Nigel. One is the fact that they have completed the product suite. So they were only making one set of transformers. Now they are making both auxiliary and traction transformer. So the combined unit size exceeds 2.5 crores, and the guidance is pretty good. 95% business comes from railways, which is locomotives. Now, if you see the old trains, you have one engine, which is a locomotive, and you have, let's say, 10, 15 bogies. So there is an annual demand of 1,500, 1,600 locomotives, and then there is a transformer demand. That's very, very secular. Now, if you see the new trains like Metro or Mumbai Local or Vande Bharat, you have a step-up locomotive. You don't have an engine, but you have, many engines, if I were to put it simply, powering 2, 3 bogies and then another step-up engine, which means the demands for transformer goes up multifold. And they're trying to figure out more applications as well. So the order book is looking good. My sense the EPS should double this year, considering the strong order book and execution they have. And they're also looking at, monetizing some assets in due course, and also looking at, any inorganic acquisition which comes their play. So solid play, more on railway Capex and transformers. But it's a small company, so sometimes liquidity is less. So exposure is confined to about 2.5% of the portfolio.
All right, Gurmeet, appreciate you joining in. Thanks a lot for discussing a couple of those names from the auto ancillary space and the railway space as well. Wishing you a good evening ahead. Well, time to slip in a short break. As we do that, let's bring you some good news for all of our viewers. India's business news leader is now just a click away, introducing CNBC-TV18 all-new app. Get instant access to breaking news, in-depth articles, and financial world updates. All of this at your fingertips. Just download the app from the Apple Store or the Google Play Store, or simply you can scan the QR code that's up for you on the screen. Welcome back. Well, keep an eye out on a few stocks on the broader markets. Capital Point, suddenly that stock has fallen off the cliff. I think we should get that one up for you on the screen. It's suddenly seen a sharp downtick, down close to 6%. We'll check whether or not there is some news flow on that one. Another one that's moved up a little bit is Vascon Engineering. The volumes are quite high in today's trading session. So just keep an eye out on that one as well. And PN Gadgil, well, it's still holding with gains, but that one, in fact, has seen a bit of a smidge down. Maybe, in fact, we should get the intraday chart, still holding with some solid gains. Welspun Corp, by the way, that has seen quite a big dip, actually, from the recent high. It went around 980, and now it's at around 912 today as well. Some consistent selling is what we've seen on that counter. But D Street saw a whole host of listings today. Sonal Bhutra joins us to help us out with a quick analysis on all those names. Sonal.
A listing heavy day, so let's start with the first one, Ellen Barry Industrial Gases, which is an industrial gas maker that listed at a premium. It was around 23% premium to its IPO price, and at these levels, the stock trades at 78 times FY25 EPS. Remember, the peer is Linde India, which is more expensive than this particular stock and trades at 126.7 times. Their growth has been decent. Revenues have increased to 312 crore rupees in FY25. Margins have been consistently improving. Levels of 35% seen in FY25 versus around 17% in FY23. Profits also have come in at 83 crore rupees, which compares with 28 crore rupees in FY23. We spoke to the management. They say EBITDA could actually improve to levels of 40% in FY27. They are net debt free. Right now, they have a turnover of around 300 crore rupees, and they also have a capacity of 1,370 tons per day, which could improve to 2,000 tons per day. Two real estate listings as well. Kalpataru Projects listing was tepid. Actually, it listed at the same price as the issue price. It's a real estate player in Mumbai metropolitan region and the micro markets in Maharashtra as well. Raymond Realty, which is the demerged arm of Raymond Group, it listed at 1,000 rupees a share versus the implied price of around 930 rupees a share, listed lower than the discovered price. Company said realty biz is a net cash biz. They have 30% market share in Thane, and they have enough work in MMR, so no plans to go outside as well. Just a quick table to see how these compare in terms of valuations. This is the market cap to sales. These two trade anywhere between 2.5 to 2.7 times, still much cheaper than the market leaders, something like a Godrej Properties, Oberoi and DLF.
Thank you very much for that. But clearly the stock of the day and the one Sonal mentioned was Ellenbury. We had a chat with the management, listen into what they had to say about their future plans.
I think as we grow, we get operational leverage, and we would expect margins to in fact edge even higher, and sort of hit an EBITDA margin number which could be even upwards of 40%. Once a new capacity comes in, so FY27 would be a better indicator. Yeah, we do become net debt free, and in terms of turnover, just to guide, we were doing about 300 plus crores of turnover based on a capacity of about 600 tons per day. We expect our capacity to go up to north of 2,000 tons per day. So, if you extrapolate those numbers, we would see strong revenue growth going forward. So we were at 600. Currently, we are running at 1,370 tons per day and looking to expand this to about 2,200 tons a day. So, yes, the revenue potential from here is significantly higher.
That's about Ellenbury. Let's talk about the markets and where we're headed. We've entered the second half of the year. Today's trading session has been quiet, but lots of cues lined up. The spotlight will be on the central bank action globally and back home. Earnings season. Jitendra Shriram from Baroda BNP Paribas Mutual Fund is now with us on the show. Jitendra, it just feels like one big wild round trip for the equity markets in the first half of the year. So much has happened, but we are pretty much back to where we were by the end of it globally. How are you feeling about the markets from here on? And how do you expect the second half of the year to play out?
Good afternoon, everyone, and a warm welcome to all your viewers as well. So first of all, I would think that markets near term might be more range-bound because there are three very important events around the corner. One obviously is the global one of US spending increase and all that. And what the implications it has for currency is going to be very critical because expansion in the balance sheet, et cetera, or the debt in the US could actually have a weakening effect on the currency, and we'll need to monitor how that plays out for our markets. The second aspect is obviously Trump's D-Day in terms of tariffs, July 9th, and we'll need to take it how it progresses from here on and what actually comes out. And that's going to be very critical for a lot of sectors here. And obviously, third is the one you mentioned. We are entering earnings season in probably a week from now. And that is again going to have a little bit of nervousness in market because the direct tax collections in the first quarter were not very buoyant. So to an extent, although it's a rear view indicator, and as our growth accelerates from here, we should improve from here on. But at least to the extent that what we saw in first quarter could be a little bit of a tempering effect overall.
All right. Hi, Jitendra. Good afternoon. Good to see you. Ben, you're playing the banking theme, though. But Jitendra, it seems, at least in the last few sessions, the smaller banks are outperforming the larger names. Yes. You, though, are loaded up on the larger names itself. How do you think this is playing out? Is it a valuation game? Is that, you had the Yes Bank deal that took place? Probably you'll have an IDBI bank that gets sold in this fiscal itself. So is that causing some excitement among the smaller names?
So I would put it like this. I think there was definitely a kind of a trade in the smaller banks because, the cost of deposits and all for the smaller banks was far more higher than the larger banks, which had a far bigger liability franchise to benefit from. So to an extent, what has happened is that when the rate cuts started filtering through into the markets, these banks actually lowered their deposit rates a lot more. So to an extent, market has been a little bit more appreciative of that. The magnitude of cuts in, say, the bellwethers like an SBI or an HDFC would have been a little lower. But having put that in context, I think one very surprising thing that has happened in the banking space is that there was a lot of expectations of NIM compression coming in because deposit repricing happens usually a little softer than loan repricing. But this time around, everybody has been really off the block in terms of deposit repricing. So, the magnitude of NIM compressions in market anticipated, it may probably be a little better than that, and the actual outcomes may be a little more favorable than compared to what was anticipated earlier.
Will that be a trigger then? Won't that be a trigger if the NIM compression is going to be much less than what was feared? Do you expect upgrades to come through for the banking space? Would it be predominantly for the large cap banks? And what about NBFCs?
Yeah, so I would say that it is definitely a trigger which can come through. So to the extent of NIM compression that markets are modeling in, I would say that although it may not be very evident in the first quarter numbers because it's happened towards the fag end of the first quarter, but I would say the subsequent quarters could actually start seeing that impact filter through that the NIM compression is not as severe as thought. And I would think it would impact across the board, large caps as well, and also the NBFC segment, because what we have seen in terms of even the money market rates, the overnight rates, etc., the way they have come off, I think it's a great benefit to the NBFC segment as well. And tomorrow, of course, there's obviously a big listing as well on the NBFC side. So that will also determine the cues.
All right. What about, from the broader markets? How are you feeling about it? There was this sharp slam dunk that took place at the start of the year in the first 3 months or so for a variety of issues, including euphoria that's playing out. But actually, the biggest money has been made out there because those that were brave enough to buy, they made some money. How are you feeling about that space? A lot of that froth got cleared out, or do you think there's still some room for it to correct?
I would say that, it has been completely a currency-driven market in a macro sense, in a sense that what we saw in the first quarter was largely because of, the way the dollar was strong, holding up strong in the first 2 months of the year. And ever since the dollar started weakening from the month of March onwards, you've seen the markets on an explosive note. So to an extent, I think it has been that way. And also what has happened related to that, India got a little bit of ammunition from the peace dividend as well when ceasefire was announced and all that. So that has also helped the Indian market and the sentiment towards it. So those are things that have generally played out well for the market. But I would expect that the next, I think we have probably, that kind of pain points we are going through in the first couple of months of the year. That is now done and dusted. Now market will await some solid cues to get at least some comfort on the earnings momentum. Because if I look at all other aspects, growth is recovering, monetary policy is easing, all the macro indicators are in place. The one thing that is falling a little short of expectations is probably the earnings momentum. And once that starts improving, I think markets will be good to look up from here on.
You're largely overweight pharma, right? Most of your funds have a fair amount of holding of pharma, and then plus you recently launched even a new fund. catering to pharma and healthcare. In that, tell us broadly the view on pharma, which are the pockets that will do well, and any sectors or any stocks that look good at this juncture.
So pharma overall, I think there are multiple drivers. So if I look at even some of the concerns that were there from a US perspective, that there could be some price clampdowns, etc., etc. By and large, see, generic drugs do see price tapering of about 5-6% annually, year after year. So I don't think that's a big problem for them to manage, given the gross margins in the business. So that has been something we genuinely feel quite strongly about, and the fact that pharma, if you raise prices of generic drugs, even in the US, the trouble will be that insurers outgo will start pricing because it's largely an insurance-driven market, Medicare, Medicaid, and all that. So to an extent, I don't see too much of a negative impact coming through from tariffs, etc., there on the pharma side. The second part, I think, is that CDMO, etc., as a space is really growing. And what we are seeing of late, and you can see it in multiple areas, like, in things like, the recent drug approvals that are coming through in India on the weight loss drugs, the diabetic drugs, plus earlier you had on shingles as well. A lot of multinational companies also becoming fairly active on launching innovation products in the country. And I think that is becoming a fairly sizable market because offtake, there is enough of demand for these drugs here, and that is also kicking up. So that is an added trigger for the pharmaceutical space.
Okay, all right, Jitendra, always a pleasure having you on the show. Thanks a lot for joining in and filling us in with your inputs on the markets. And how do you see the economy shaping up as well? Well,
Thank you.
For the time being, we slip into a break. As always, Nimesh is waiting for us on the other side. He'll tell us what he's picking up in D Street Chatter, and he'll also tell us what's going on with regard to individual stocks. Later on, we'll be joined by technical experts for buy or sell calls.
Welcome back. About 30 minutes to go before we wrap up Tuesday's trading session. The Nifty is so quiet. I think in the last 30 minutes or so, it's not moved. 20 points up now on the index. Mitesh is now with us for a few BTST calls. Mitesh?
The index is still in the contracting mode. It's the Bank Nifty which is showing more strength. So we've already taken some financial names, but that about, I think the cement name which had a big breakout couple of days back are giving a pullback. So Dalmia Bharat is a BTST. Keep the stock just below levels of 21.75. Look for targets of look for targets of 22.15. And the other one which I like is Cipla, which is a BTST with a stop at about 15.06 for targets of 15.30.
Thank you very much for that. Now let's get to our D Street segment, where Nimesh is now joining in with all the insights that he's gathered about today's trading session and individual stocks. Nimesh?
Hi, Reema. Another flat day. So it looks like it's a consolidation phase for Indian markets, and rightly so, because I guess the market lacks triggers now, and I think the next big trigger will come with the earnings season. So that's something to closely monitor going forward. Again, from a flow perspective, it's a very muted day, not much in terms of flows as well. Pretty much mixes what I understand. And there is a bit of profit booking in general in the broader markets as well for the last couple of days. I guess the sector which stands out, and I've been saying this in the feedback as well, that the PSUs are well bid. And again, today again is a day for the PSU bank stocks to outperform the overall market. So again, that's backed by some bit of institutional buying as well. Nifty, I guess, as I said, is a bit of a consolidation zone. But I guess apart from earnings, the very near-term trigger could be the Indo-US trade deal. That can have a bit of an impact on some specific sectors like IT and pharma. So that's something to watch out. But broadly, it's a consolidation day with not much in terms of flows as well.
What about stocks? Things are quiet at the index level, but did you pick up anything on individual stocks?
Well, there are a lot of stills which are still buzzing in trade, a lot of QIPs or fundraising. So the first stock on my list today is Aegis Vopak. That's been under pressure. It was down 3% yesterday because the anchor lock-in opened up. But I believe there is a bit of buying coming back in this particular stock. Even in today's market, there is delivery-based buying from larger FIs. So that's the first name, Aegis Vopak. The second couple of stocks, mid-cap names where I understand there could be fundraising very soon. Kaya, which is in a 2% circuit, and Prime Focus. That's been a big mover in the last few days. And I believe in both these names, there could be fundraising via preferential issue very soon. So that's the trigger there. The third name is Navin Fluorine. It was part of my charter 2 weeks back as well. The stock has rallied since then, almost at 52-week high now. There is buying interest, and I believe that the fundraising via QIP is very much around the corner for Navin Fluorine. And the last is Ganesha Ecosphere. Again, the stock has been a bit of soft in the last few days, under pressure as well. There was an initiating report from Spark few days back, but I believe at these levels, some bit of institutional buying, at least the domestic mutual fund seems to be accumulating at lower levels. Remember, the DI holding is quite strong at almost 22% in Ganesha Eco, and still some domestic mutual funds are buying here.
Thank you very much for that. And then Vintage Coffee that you were telling us about, that board meet has been announced, 14th of this month.
No, I think 4th, a day after.
4th, sorry.
Yeah, 4th of July is the board meet. So wait and see as to who all comes in the pref issue.
Thank you very much for that. Well, the other trigger was the auto sales numbers, which came out for the month of June. Broadly, let's start first with the two-wheelers. And here it's Eicher Motors which stands out on the way up and Bajaj Auto on the way down. So starting with Eicher Motors, because that's where the beat came in, Eicher Motors' total Royal Enfield sales went up by a whopping 22%, ahead of expectations. And it's the international business, its international volumes are only 14% for Eicher Motors, but a 79% jump on a year-on-year basis. So that was clearly the driver. TVS Motors was in line with expectations, about a 20% growth. But now you compare that with, say, a Bajaj Auto. So while an Eicher has done 22%, TVS has done 20%, Bajaj Auto's total sales growth is a muted 1%. And that's the reason why the street is disappointed. Bajaj Auto sales have come in lower than expectations, and it's the domestic sales where, which is struggling. Domestic sales are down nearly 13%, while exports continue to chug along smartly. Now coming to the automotive side, here M&M continues to do very well. Now M&M's automotive sales have seen a growth of close to about 14%, where passenger vehicles has done well, but commercial vehicles has been absolutely flat. Tractors for M&M has done exceedingly well, beating expectations with 13% growth. So this entire monsoon, the Rabi harvest, has helped sentiment. Tata Motors, on the other hand, has had a subdued month and quarter. So Tata Motors' total sales have missed expectations. They've declined by 12% in June, and even in the first quarter, that's Q1, April to May, total sales for Tata Motors are down nearly about 10%. So that's been the miss this time.
All right, so a bit of a mixed bag is what we're seeing on that one. But we were talking about Reliance Industries technically earlier, that the 20 DMA has a lot of relevance right now, which is at around 1,460 or thereabouts. The stock continues to hold one end up, and it's trading in the green. This after Nuvama as well has given a buy rating on the stock. Sonal joins us to run us through the fine print of that note. Sonal?
Well, there's an interesting note that has come in on Reliance Industries from Nuvama, where they have raised the target price. They say that their channel check suggests that the company has gone ahead and started selling modules externally, and this is the start of the first line of the 8JT module manufacturing capacity of 1 gigawatt. They say these are offered in the market, in the lucrative domestic market where there is a lot of demand, and this could also mean that they are selling it at a premium to the other type of module, which is the TOPCon. At premium pricing, Nuvama thinks that they will be able to garner 3,800 crore rupees at peak capacity, which is 10 gigawatt. And this 3,800 crore rupees is actually 6% of their FY25 PAT. So it is a big number that could be added to their P&L. The Nuvama says they are watching out for the upcoming AGM, which will be either in August or September. And in addition to integrated solar facilities, they also plan to set up a battery facility of 30 gigawatt hour. And hence, they are raising the target price to 1,801, which is highest on the street, to factor in potential for higher than expected module tariffs. And they also have a buy rating on the stock, quite positive on this one.
Thank you very much for that. The other big mover today is Gabriel India, surging on the back of their merger with Anand Group's auto and related businesses. Hormus is here to break down this deal for us.
Yeah, big developments indeed. And Gabriel made this announcement last evening that they are planning to consolidate the automotive business of the Anand Group into one single entity. And this will be done via multiple steps. Now, the first step will be the merger of a company called Ankemco into Asia Investments Private Limited, which is AIPL. And first, then the automotive business, once that is done, then the automotive business of AIPL, which will include Ankemco and other entities like Dana Anand, Henkel Anand and ACYM will be demerged from AIPL, and then that demerged entity will then be merged into Gabriel India. Now, as per this merger, they are offering 1,158 shares of Gabriel for every 1,000 shares of AIPL that shareholders will own. This deal, of course, is subject to multiple approvals, including the board, stock exchanges, NCLT and such. And once these approvals are received, within the next 10 to 12 months, the merger is likely to be effective, is what Gabriel has said. Now, and once this merger process is complete, the promoter shareholding will go up to 63.5% from the current 55%. Now, they cited multiple reasons for this, including the simplification of the group structure, expanding their business operations in the domestic as well as the global markets, and of course, increasing the scale of the company, as they are mentioning, as the fact that it also answers shareholder concerns on product diversification and on the company's M&A strategy as well. And they're saying that they are creating more scale for Gabriel without any additional leverage or a cash outgo. The street possibly had a whiff of this. The stock was up 20% over the last 5 trading sessions, and now that the news is out, the stock is up another 20% today.
Okay, all right. Thanks a lot for that, Hormus. Well, earlier today, JSW Paints spoke to the press about their plans to acquire AkzoNobel India. Manglam is with us to run us through the key takeaways. Manglam?
There were a couple of key takeaways that one got from the JSW Paints and AkzoNobel India press conference. The most important one, how does JSW go ahead and fund this deal, to which Parth Jindal did say a third of which will be coming in from their own group's internal accruals, another third would be tied up from banks, and the other third for which they have multiple private equity partners, of which they are going to soon select one. Importantly, the combined revenue, the decorative revenue of the group would be 3,700 crore rupees, which they believe can immediately scale to 6,000 crores once the merger is consummated. And then their next target would be doubling their revenue and thereafter taking it to 10,000 crores in the next 2 to 3 years. Aspirationally, they are looking at the number 3 spot in the paint industry immediately, the decorative side, and industrial, of which they are number 2 in the country right now. They will target to place themselves at the number 1 mark itself. In terms of the cost synergies, the immediate synergy that would come by would be 350 basis points of the royalty savings that would take place on account of this deal. And over and above that, Parjindal did mention that there would be some savings on procurement, logistics, as well as some capacity utilization. Leadership will remain with, they haven't specifically commented, but indications are Rajiv Rajgopal of AkzoNobel India continues to stay on as the leader of the combined entity. Once the merger does go through, while it is premature to talk about whether, JSW Paints will reverse merge into AkzoNobel India as per Parjindal, that option is definitely not off the table. So these were a bunch of takeaways that we got from JSW Paints, which aspires to be number 3 quickly and perhaps looking at number 2 at some point as well.
The funding is a mix of internal accruals, leverage at JSW Paints, as well as getting some support from financial creditors through private equity. And we have tied up the entire funding for not only the open offer, but also the stake sale. In terms of our targets, I think we become the second largest player in industrial coatings after this coming together. And in decorative, we become a close, very, very close number 4 player with number 3 very close to our grasp. I think it would be a bit premature to set any targets. We obviously still need Competition Commission of India approval and other regulatory approvals to come in. But I think the power of JSW and Dulux and coming together, I think no target is insurmountable. And unlike others, we have a profitable business. We don't need to burn our way through getting to the numbers that we need to reach.
Okay, all right. Well, let's get back to the market. Jay Bala from cashthechaos.com joins us on the show. Hi, Jay. Good afternoon. Good to see you win. You're feeling good about the markets and you believe the top player, that's Reliance Industries, the big boy, is going to come out and bat for the Bulls. Tell us more.
That's right, Nigel. Good to be here. The breakout zone for Reliance Industries is at about 1526 to 1538. And if the stock were to close above 1526, it will be the highest close since 22nd of July 2024. And the only thing that stands ahead of Reliance is possibly the all-time high, about 1600 odds. So, the big boy, and it is a barometer of the Indian market and the Indian economy. So that's telling us that, a breakout is ahead and possibly that could lead to bigger moves on the Nifty, possibly an acceleration. And as a small tidbit, Nigel, the president of the United States, considered the powerful man in the world, disowned their own stock market, saying that it was a previous president's stock market. And the record highs are upon us for the US markets. If you don't know where the trend is and what the trend is, you can get left out.
And what's the broad expectation in the near and medium term about the Nifty and Nifty Bank?
Hi, Rima. I'm anticipating and maintaining the price objective of 29,000 for the Nifty from a 6 to 12 months perspective. I think it's going to be a straight acceleration of the next 1,000 points. But there's a small possibility that we could have a pullback first before the markets get higher. But in either case, the Nifty is heading for 29,000, in my opinion. And the Bank Nifty is a shade, weak. Today, it's actually slightly leading the markets a bit. If SBI were to have a breakout about 835, 837, that will bring the PSU bank, which have been laggard, into action. And then once again, SBI could be the trigger for the private sector banks to also rally in sympathy. So the objective I have for the banking index is about 59,000, and it's slightly lower than the objective that I'm projecting for the Nifty. But let's keep it conservative for the moment.
Okay, so 29,000 on the Nifty and 59,000 on the Nifty Bank, right?
That's correct.
Got that.
Okay, all right, Jay, we will need to take a short break, but I think you've got 2 stock calls for us. So give us that and then we'll take that break.
Yeah, Siemens is a short-term call. It's not a medium-term call, and so. But since I've been bullish on the capital goods sector for some time, I continue to be bullish, and this is a stock that's playing catch-up with the rest of the sector. A stop loss of 30.80. Possible objective is about 37.50. It could be higher, but because this is a slightly weaker stock within the capital goods space, I'm having a lower objective of 37.50. The next stock is Bank of Baroda, and I mentioned Bank of Baroda on PNB last week, and they're showing positive price action. Yesterday, it showed some life, and possibly this is heading to somewhere close to 275. Stop loss below the June low of 230 is a necessity for this particular stock.
Stay on. Need to get into a short break before we wrap out today's trading session. But remember, all our viewers, please do tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back. Well, we're still in conversation with Jay Bala. Jay, any other asset class you want to give us a couple of levels on? Maybe gold, dollar index?
Yeah, dollar index is coming to a long-term support about 96.5 to 95.5, and it's nearing an exhaustion point. So possibly a very short-term up and down sequence is pending for it. Post that, we're likely to see a pullback for the dollar. And I didn't expect the dollar to come to 96.5 in this cycle itself, but it has come here. But the fact is 96.5 and 95.5 is a very long-term support from the financial crisis low. When it comes to the U.S. equity markets, since the financial crisis low of 2009, July months have never had the last 10 years of July hasn't had a negative July for the S&P 500. And since the financial crisis low, there have been just 2 negative Julys which have been 2011 and 2014. So with markets at record highs, we are at a very important seasonality backing the US markets. When it comes to precious metals, the outperformance of silver, in my opinion, has come to an end. So we are likely to see a correction. And gold came very close to an important support at 35.45. It came to 35.47 on the London fixing. If it breaks 35.45, it will confirm that both gold and silver will correct significantly. But there is a small possibility if the 32.45 doesn't break, gold could retest the all-time high at about 3,500 and come back to do the correction that I'm projecting. So
right, Jay.
32.45 very important.
So Jay, your gold and silver, you're not ruling out a 20% correction from here. Is that correct?
That's right. Very, very important that gold London fixing should break 32.45. It came to 32.47. Basically, right now it's saying that it's holding the support, but I'm more confident about silver. Silver is on a corrective decline to somewhere close to $28.
Okay, got that. So both of them, there's possibly could be a decline, but 32.50 is the important mark on gold, right?
That's right. 32.45 to be more precise.
32.45. Got
it. What about dollar index? That's seen quite a slump, 11% down in the first half of the year, and it's the biggest first half loss since 1973, data tells us.
Yeah, it's in a very long-term price fluctuation, and if you draw a parallel price channel from the 2008 low, that will hit 96.5, 95.5. So we have a very movement that's synchronous, movement that is also coming in line with the price channel support at 95.5. So it's having a very, very significant support at 95.5. Unlikely to break in the near term. We are likely to see a short-term bump up to about 104 for the US dollars. Say somewhere about 4 to 6 weeks time frame, or slightly longer than that, 4 to 8 weeks.
Anything in the paint complex? Fundamentally, some people believe, analysts are pointing out that they've gone through a long period of correction. Valuations are below subpar, so upgrades are coming through for the likes of Asian Paints, etc. Technically, are you seeing anything supportive in the charts?
Within Asian paint space, Asian Paints and Budget Paints, I like Budget Paints. That's relatively stronger compared to Asian Paints. It's had a good run already. So I wouldn't be too bullish on both these names, but if you have to play, and if you make a single pick from here, I would say Budget Paints is a candidate out here because, but it's already an outperform from its 2025 low. So Asian Paints could play a catch up, but from a price structure point, I would say you should be allocating more towards budget rather than Asian Paints.
And sometimes, the price tells you the story, right, before the story. So now we're entering into the earnings season with IT. What are the charts telling you? What kind of an earnings season will it be for the tech companies this time?
Yeah, I think it's a very important crossroad of the Nifty IT index. As long as the index can hold 36,000, I think bullish prospects have a higher potential. I treated the recent bounce to about 40,000 as a corrective bounce, and we have been anticipating that for several weeks now. But right now, as price action suggests, there's a good possibility that it might hold 36,000 and rally past 40,000. The key for that is possibly TCS. TCS crossing 3550 is going to be very important for the IT sector. But from a relative ranking space, I would rate Tech Mahindra, Coforge, Persistent as higher candidates, stronger candidates compared to TCS and Infosys and HCL Tech.
Got it. All right. Jay, I request you to stay with us. For the time being, we'll just wrap down on the markets. Well, it was a pretty okay trading session. Some consolidation of the headline index with a bit of a positive bias. Apollo Hospitals, they announced that big value unlocking. The street loved it. The stock goes home with a gain of around 3.5%. BEL, remember last week the stock had corrected from around 420 to around 400. And it had crucial support at around 395. And from there, it's rallied close to around 10%. But the heavy lifting is being done by big boy, Reliance Industries, up 1.8% yet again. You had Geo Financial that moves in tandem. That as well was higher in trade. What didn't do well? Nestle came in for profit taking, down 2%. Axis Bank was down close to around 2.2%. And Trent as well cooled off a little bit by around 1.5% or thereabouts. From the broader markets, Ola Electric continues its downslide. That was down 2.5%. NMDC as well, there was a price cut that was actually larger than expected. So that's why that stock was under pressure in trade. Force Motors wasn't a force to reckon with today. That one, in fact, pulled back close to around 8% today, though that's seen a very, very big run in the last few weeks. So that one, in fact, did come in for profit again. Similar is the case with Coromandel International. Actually, that has run hard. That ended lower as well. Borosil Renewables, that stock was down close to around 6%. And Kaplan Point, towards the end of trade, suddenly that one as well came in for a bit of a knock by the time we wound up. The advanced decline ratio, pretty much even Stevens. You had 1,300 stocks apiece on both the sides. But we had a new listing today, Ellen Berry. That really caught your attention. Went home with gains of around 34%. And Gabriel India, it rallied in the run-up to the big announcement that they spoke about. And in fact, in today's trading session, in the first 2 minutes itself, it was locked in upper circuit, and that circuit didn't break all through the session. So not a bad day actually for the bulls, a bit of consolidation with a mild positive bias. Well, we'll wrap up on closing bell, but you don't go anywhere because Markets Forward comes up next.